The second unit, and it is main, and it is about the contents of the financial statements. The first content we have is the today we're going to learn what is Schedule 3 as per the companies at 2013. We're also going to learn what is balance sheet, how to prepare balance sheet, what items are there. This is that. This is what we're going to learn today. So, as far as the balance sheet is concerned, or we talk about the financial statements of a limited company or private company, they have to follow a certain rules and regulations. If you take into consideration the balance sheet prepared of a proprietorship concern, partnership concern, there is no format. But for corporate companies, Companies Act 2013 has laid down some rules and regulations. And as per Schedule 3, we have to follow the rules while we prepare the financial statements or final accounts. Now, what is Schedule 3? Someone please read. Yes, please read. Hello.
The Ministry of Corporate Affairs (MCA) has amended Schedule 3 of the Companies Act 2013 on October 11, 2018. Schedule 3 of the Companies Act 2013 provides the format of financial statements of companies complying with accounting standards AS.
Yes. So we are discussing about the Schedule 13, Schedule 3. So what is Schedule 3 and who has brought this Schedule 3? The Ministry of Corporate Affairs has introduced this Schedule 3 so that when we prepare the final accounts or we prepare the statements, it will be easy and common for all to follow. That is the main intention. Previously, what was happening was that many companies were preparing the accounts as per their own conveniences. It was difficult for the companies to compare and everything. And then what is that? This Schedule 3 that the Ministry of Corporate Affairs has laid down as to how the balance sheet has to be prepared. So it becomes very easy for anyone to compare a balance sheet of one company with another company. So to ease the comparison, the Schedule 3 was introduced, and as per the Schedule 3, the companies has to follow the rules and regulations set by this Ministry of Corporate Affairs, and they have to prepare the balance sheet in the given formats. Yes, please continue reading.
The main aim of the amendments in Schedule 3 of the Companies Act 2013 is to improve the transparency in the financial statements of the company.
Yes, the main reason why this Schedule 3 was introduced was to bring transparency. Transparency is what? Whenever we are the investors or the stakeholders are going through the statements, they should find it easy to understand that. Transparency means what? There should not be any hitch, there should not be any more detailed investigation required to understand the balance sheet. So to understand the balance sheet in a very easy manner, balance sheet I mean financial statements, to bring transparency, the Schedule 3 amendments were carried out and the Schedule 3 become applicable to all private and limited companies that they have to follow. Yes, please. Please read.
Where compliance with the requirements of the Act, including accounting standards as applicable to the companies, require any change in treatment or disclosure, including addition, amendment, substitution, or deleting in the head or subhead, or any changes inter se in the financial statements or statements forming part thereof, the same shall be made, and the requirements of the schedule shall stand modified accordingly.
Yes. So Schedule 3, what is Schedule 3? Schedule 3 is a rule that the companies has to comply with when we are preparing the final accounts or financial statements. And while doing so, we have to follow the accounting standards already laid down by the income tax department. So we have to keep this all in mind as to the about the various schedules that has been the various standards that accounting standards has been implemented. So we have to follow Schedule 3, which will we also have to follow the various accounting standards, and with the base of that we have to prepare the financial statements of any organization. So there are changes, amendments happening as and when there is a change in the industry, in the working, and whatever changes are being affected in the accounting standards, that also has to be brought into force when we are preparing the final accounts or financial statements. Next. Please read. Yes, please read someone.
The disclosure requirements specified in this schedule are in addition to and not in substitution of the disclosure requirements specified in the accounting standards prescribed under the Companies Act 2013. Additional disclosures specified in the accounting standards shall be made in the notes to account or by way of addition statements unless required to be disclosed on the face of financial statements. Similarly, all other disclosures as required by the Companies Act shall be made in the notes to accounts in addition to the requirements set out in the schedule.
So this schedule 3 further goes ahead and we speak about something called as disclosure. Disclosure means what? We have to disclose. Disclose means what? We have to give information. So whatever information is required as per the income tax rules or whatever rules are being enforced applicable to that entity, they have to give the information. Disclosure has to regard with the unpaid dividend. Disclosure has to regard with the leasehold property. Disclosure has to regard to the application money received for the shares. So whatever information required, yes, that has to be given. And any more additional disclosures, yes, we have to also give that. So Schedule 3, along with Schedule 3, we have to focus on the different disclosures that has been laid down under the different accounting standards. Yes. Schedule 3, one of the things that we have to focus. Can you please read what is it? I'll read for you. Now we have to focus on preparing financial statements. Now we have to give the figures. Now we have to give the figures we can do some rounding off. So what is the rounding off? So number A, when the company's turnover is less than 100 crore rupees, we have to round off to the nearest hundreds. Like suppose the sales or the turnover is 179 crores and 147 lakhs and 860. So 860 will be converted into 900 only for the purpose of rounding off, not actually in the balance sheet. So when you're presenting the data, we will going to do the rounding off. If your company has a turnover of less than 1 crore, 100 crore, then you have to round off to the nearest 100 or thousands or lakhs, depending on that. If your company has having turnover more than 100 crores, we can round up to the nearest lakh rupees. So we cannot do rounding off for hundreds and thousands in company which is having turnover more than 100 crores. One. Next. Now we are going to study the balance sheet, format of balance sheet as per the Schedule 3. Shall we? Can I?
Yes, sir. Yes, sir.
So now we're going to study the balance sheet format in the Excel format. Now till date we have learned T format. Now this is a vertical format. This is a vertical format. I think I need to share my screen again with you. Are you able to see a balance sheet on your screen? Is it?
Yes, sir.
You can see balance sheet. Do you find Schedule 3 balance sheet? Because on my screen don't see. Can you see some yellow color, blue color, and green color? Is it?
No, sir. No, sir.
Yeah, 1 second. Yes, now you can see. I've
Yes,
shared.
sir.
Okay, so this is in Excel format balance sheet. Schedule 3, Section 129 of the Companies Act is giving you the guidance or guidelines and prepare balance sheet. So the format has been prepared and we have to follow this. So balance sheet, this is vertical balance sheet means that it is not a T format. Usually we had a T format. On the left side we have liabilities, on the right side we have assets. But now if you focus on this balance sheet, first column is particulars, then note number, then figures for the current reporting period, current financial year, and the green color reports is pertains to your previous accounting year. हे बॅलन्स शीट मध्ये या ठिकाणी 4 कॉलम आहेत. पहिल्या कॉलम मध्ये पर्टिक्युलर्स आहे, दुसऱ्या कॉलम मध्ये ती फुटनोट आहे, तिसऱ्या कॉलम मध्ये ज्या वर्षाचं तुम्ही अकाउंटिंग करताय तो येलो कलरच्या कॉलम मध्ये तुम्हाला या ठिकाणी अमाऊंट टाकायची आहे आणि त्याच चौथ्या कॉलम मध्ये मागच्या वर्षी त्या कंपनीचे काय फिगर्स होते, काय अमाऊंट होती ती ग्रीन कलर मध्ये या ठिकाणी कोडिंग होणार आहे. सो दिस इज द बॅलन्स शीट फॉर्मॅट. फर्स्ट इज द पर्टिक्युलर्स कॉलम, सेकंड इज द नोट कॉलम ब्लू कलर. The yellow color indicates that the company is the figures for the current year in question or the accounting year we are focusing, it will be shown in the yellow color. Then lastly we have the green color focusing on the figures or numbers which were pertaining to previous accounting period. So this is what is the first item. So first is your balance, first is your liability side. In liability, we have one equity and liabilities, then we have second is your assets. So balance sheet is like we have two parts. One number in Roman indicates equity and liabilities. In that we have shareholders funds, then we have share capital, we have reserve surplus, then we have money reserve. So this format you have to learn, you have to memorize this. This is that good. They might ask you in the questions, they might ask you in the exam, or even for the interview, they will ask you to write the format of balance sheet as per schedule 3. So as per schedule 3, the first part in the balance sheet is not liabilities, it is equity and liabilities. It is equity and liabilities. What is first item in equity and liabilities? Can someone read what is the first item? Yes. Someone please read what is the first?
Shareholder and fund.
Shareholders fund. In that, what is the first one?
Shareholder and
capital.
fund.
Share capital,
Share capital. Second is reserve surplus. Then we have money received against share.
reserves and
Receive again and share.
Yes. What is share warrant? Anyone can explain me what is share warrant? Any idea you have? Hello? Hello? Okay. So first is your liability, but in a limited company, we don't call it as liability. It is been titled as, equity and liabilities. It is titled as equity and liabilities. In that first we have number one is shareholders funds. In the shareholders fund, we have share capital, then we have reserve surplus, then we have money received against share warrants. Then second is share application, money pending allotment. Third, we have non-current liability. Then we have current liability, and the total of the liabilities will be written over year of the current year and the previous year. So this line which I have not highlighted is the total of the total liabilities. So liabilities, we have 4 points. Number one, shareholders. Second, share application. Third, non-current, and fourth is current liability. So today we're going to learn these all items in a quick shot. What is this liabilities on? I'm taking you over to the presentation. Yes. Okay. I'll share my screen again. Yes, you can see the screen now, students.
Yes, sir.
Okay. The first instruction while we are preparing the balance sheet is about share capital. So in that share capital, first is for each class of shares. Each class of shares means what? We have to prepare separate for equity, we have to prepare separate for preferred shares. Then the number one is what is the authorized capital? Authorized capital is the capital by which we register with the government that this is the amount that will require in the business during the lifetime to raise the capital. So authorized capital is the capital that has been authorized by the government. You can raise through issue of shares and issue of debentures. First is authorized capital. P, the number of shares issued, subscribed and fully paid is mentioned over there. So from what quantity of shares the company has issued, that will come under this B part, that is number of shares issued, subscribed and fully paid up. C is the par value of per share. Then D is how many shares has been issued, how many people, how many shares has been totally paid by the public. That reconciliation has to be mentioned, or we have to focus when we're writing the balance sheet, we are drafting the balance sheet. Next is the rights and preferences and restrictions. So when we are trying to write down the balance sheet, when we are preparing or drafting the balance sheet, we have to take care of the different rights we have given to different shareholders. It may be preference shareholders or different class of shareholders, or about the dividend, about the repayment of capital. So when we prepare a balance sheet, what is that we need to follow? Is we need to follow what are the different types of shares, what different class of shares, what rights are there, what preferences are being promised. According to that, we have to study, then we have to mention about the balance sheet, that is shares. Next. Then when we are preparing balance sheet and when we are drafting share capital, what is that we have to focus now? That shares in respect of each class in the company held by its holding company. Now we need to mention what is holding company, what is subsidiary company. Once you understand what is subsidiary holding company, even that we have to mention in the balance sheet liability side that we have a subsidiary company and our holding company is so and so. Then next point, when we are drafting balance sheet and when we are writing the share capital, we have to focus if any person is holding more than 5% of the share capital, we have to specify his name and number of shares that the person is holding in case he is holding more than 5% in an organization. Then after your reserves and surplus, one second, now. One second. Okay, now we have just covered the first part, that is share capital. Now focusing on reserve surplus. Can you see the screen? Surplus and reserve surplus?
Yes,
Yes.
sir.
Now,
No,
Payal,
sir.
Payal, can you mute your mic? Play music. Payal, Payal, please take care when you're unmuting your mic. No? So the first part we have just covered is share capital. Now we'll cover the
Sorry,
part of,
sir.
yeah. Second part is reserve surplus. So now we'll focus on reserves and surplus. So here in this reserve surplus, what is that? So reserve surplus is that money that which we have kept aside from the profit. For what? For future. For what? Contingencies. So we may require money, we may require funds, like we have COVID pandemic situation, we may require little money for such situations. That is the reserve. So we have capital reserves, we have capital redemption reserve. What is capital redemption reserve? If you have procured capital by issue of debentures, we have to redeem that and we have to keep money aside every year from the profit so that after 5 years, 10 years, you don't have a big load for paying the debentures back. So we've created a fund that is capital redemption reserve, securities premium reserve, debenture redemption reserve, revaluation reserve, revaluation of assets and liabilities. If in the coming years, 2-3 years, if you're going to revalue your assets, then how you're going to revalue? If there's a change, the amount from this account of revaluation reserve can be utilized for adjusting the revaluation in the assets and liabilities of an organization. Then any other reserve, like we have created reserve for building construction or for asset replacement, even that comes under G part, that is your reserve surplus. H part is surplus. What is surplus? Whatever profit the company has earned after paying the expenses, after paying the income tax, this amount is called as surplus. So surplus is the balance in the profit account which has been left over after paying the dividend, which will be small amount, which will be carry on for further next years. So surplus is the profit which is not yet distributed, which is balance in the account to be given to the shareholders. Then we have is long-term borrowings. Now again go to the, so we have finished with share capital, reserves and surplus, and now we're going for long-term borrowings. Now what is long-term borrowings? Yes, may I request someone to read, please? Please read.
Long-term borrowings shall be classified as bonds and
Bonds and
debenture.
debentures, yeah.
Okay. Terms loan
Hmm,
from bank,
hmm,
from other parties.
very good. Then deferred payment liabilities,
हाँ,
then
sir,
deposit.
screen it now. Deposit,
Hmm.
loan and again, this,
While
sir,
there's someone who's playing
speaking is
the
not.
TV behind you. Can you switch off the TV? Can you ask your family members to switch off the TV?
Yes, sir. Sir, sorry.
Can you ask them to switch off for some time?
Yes, sir.
Yeah. Yes, please read now. Thank you, Payal. Other students can also read. Satvinder, can you read, please? Tarannum.
Yes, sir.
Long-term borrowing shall be classified as bonus debentures, term loans from banks, from other parties, deferred payment liabilities, deposit, loans and advance from related parties, long-term maturities of finance list, obligation,
Obligation.
other loans and advance, obligation, sorry, sir.
Yeah.
Other loans and advance.
Now, the screen that you have, the slide in front of you, depicts or shows what is called as long-term borrowings. Long-term borrowing means that you have borrowed money for a long time because you are likely to buy a machine, or you borrowed a machine, or you're constructing asset. लॉन्ग टर्म बोरिंग कब होता है? जब आपकी कंपनी में आपने कोई बड़ी मशीन परचेज की, आपने कोई एक्सपेंशन का प्लान किया है, उसको हम लॉन्ग टर्म बोरिंग्स कहते हैं. लॉन्ग टर्म बोरिंग्स इज व्हाट? द मनी दैट वी हैव टू रिपे आफ्टर अ लॉन्ग पीरियड ऑफ टाइम इज कॉल्ड एज लॉन्ग टर्म बोरिंग्स, or that money will be with you for a long period of time. So long term borrowings is the borrowings or the loans taken by the company for long duration of time. So it will be like bonds. By issue of bonds and debentures, we borrow capital. By issue of debentures, we take term loans from banks, from other parties, that is from financial institutions. Like we talk about SICOM, we talk about IDBI, we talk about ICCI. They are also financial institutions. From banks also we can take term loan. From financial institutions we can take term. Then we have some deferred payment liabilities. Then we have accepted a deposit from the public. If the public has deposited money in your company, with your company, for a period of more than 1 year, that comes under deposit. That is a long term borrowing. जैसे हम यहाँ पे बैंक में एफडी करते हैं, वैसे ही कुछ लोग कंपनी में भी एफडी कर सकते हैं. कंपनी ऑल्सो एक्सेप्ट फिक्स्ड डिपॉजिट्स एंड दे रेज मनी बाय इशूइंग सच डिपॉजिट्स. अदर देन दैट इज लोन्स एडवांसेस. हमारी जो कंपनी है, हमारे जो रिश्तेदार है, अगर वो कंपनी से हम अगर लोन देते हैं तो वो भी आपकी लॉन्ग टर्म बोरिंग होती है. सो इफ योर सिस्टर इज डायरेक्टर इन अदर कंपनी एंड द कंपनी इज गिविंग यू लोन मोर देन 1 year ड्यूरेशन टाइम, that is again your long term borrowings, but it is loans and advances from related parties. Then we have long term maturities for financial obligations. Like we have taken a machine on lease because we don't have money to buy. So if you've taken a machine on lease, that is your long term borrowings. Or any other loan you're taken from anyone, which is for duration of more than 1 year, is your long term borrowings. Next. One second. Yes, please read. Continue. Someone please read.
Borrowing shall be further be subclassified as,
Secured.
so what is that? Secured and unsecured. Nature of security shall be specified separately in each case. Where loans have been guaranteed by directors or others, the aggregate amount of such loans under each held shall be disclosed.
Okay, now we're discussing about long-term borrowings. In that we have loans which we've taken. Now, when we're taking loan from bank wants a guarantee, bank wants a surety. So when a company has borrowed loan where the company has hypothecated its assets like land, building and plant and machine, those are called as secured loans. जर तुम्ही तुमच्या व्यवसायामध्ये भांडवलासाठी बँकेकडून कर्ज घेतलेलं आहे आणि कर्ज घेताना तुम्ही तुमच्या कंपनीचे काय ऍसेट्स या ठिकाणी जर पेपर डॉक्युमेंट्स ठेवले असतील तर आपण सेक्युर्ड लोन म्हणतो. So secured loans are the loans which we have taken by depositing some title papers with the bank. Those are called as secured loans. So when we have loans, such type of loans in the balance sheet, we have to clearly mention it is secured loan on plant and machine, secured loan on land and building. That is to be clearly mentioned, need to be mentioned in the balance sheet. This is the guidelines that the government has given as far as the balance sheet paper is concerned, as far as the long-term borrowing is concerned. Then same way, we can also take loan. The company has taken loan, but where it is being guaranteed by the director. The director has taken the surety and told the bank, informed the bank, in case the company is not able to repay, I, in the personal capacity as a director, will be liable to pay the loan. If you have taken such loans where the directors have guaranteed, we need to mention in the balance sheet liability side that loans taken but guaranteed given by directors. So that is need to be disclosed in the balance sheet. So what we are learning is to prepare the balance sheet, what guidelines we have is what is long-term borrowings. Long-term borrowings is the borrowings which is taken for more than 1 year, and we have taken maybe by giving any security or non-security, or where we're talking about where loans have been guaranteed by directors or others. So this is your long-term borrowings. Next, again continue. This I've covered actually. 1 second. Now we focus on what? Hello.
Other long-term liability.
Hmm. Yes, please read.
Other
loan.
long-term liabilities shall be classified as trade payable others.
So we have other long-term borrowings or long-term liabilities. What is this other long-term borrowings and liabilities? That we have taken loans, but that is under a different new category, that is trade payables and others. What is trade payables? When you are borrowing money from the suppliers for the purpose of raw material, that will come under the category of long-term liabilities, trade payables. Next. Now we have something called as long-term provisions. I'll take you back to this Excel sheet. Okay, what is that we're learning today is the balance sheet liability side. First, we discussed about the share capital. We have to mention all the different type of shares, the preference shares, the equity shares. Then we have to mention about the different reserves, then the money taken against share warrants, share application allotment money. Then in non-current liabilities, is what? Long-term. So long-term borrowings, deferred tax, other long-term provisions. And now we're focusing on long-term provisions. Let's focus on long-term provisions. Yes, please read.
The amount shall be classified as previous from employee benefits and other.
So the long-term provision is what? Students, when you work in an organization, you have some privilege, you have some things that you will get after retirement. What you get after retirement is the provident fund or a gratuity. So gratuity is a long-term provision because gratuity is being given to the employee when he gets retired from the organization or from when he leaves the organization. So this is a long-term provision. So it is a provision means you are making a certain arrangement that in the future, if any employee leaves our organization, we may have to give him gratuity or provident fund, and that will be taken care in the balance sheet liability side, showing as provision for employee benefits. This is your long-term provision. Next. Yes, please, someone please read the next slide.
Short-term borrowings.
Hmm.
Short-term borrowing shall be classified as loans repayable on demand from banks, from other parties, loans and advances from related parties, deposits, other loans and advances.
So we are talking about short-term borrowing. Short-term borrowing is a borrowing which is less than 1 year. So when you're procuring funds or money for the business where the duration is less than 1 year, it's called as short-term borrowings. So loans repayable on demand means what? Whenever you're taking a loan, the person may demand, and that time you can't tell, wait for 1 month or 2 months. So whenever the bank or any party who has given you loan ask the money from you any one point of time, that is loan which is repayable on demand. That comes under the category of short-term borrowings. So we can take a loan on demand from banks and from private parties also. Then B parties loans and advances from related parties. So as I said, if one of my brothers is also having company, and from that company if I'm borrowing a loan, but the loan duration is less than 1 year, that will be coming under the category of short-term borrowings. If you're taking money from public, but the duration is less than 1 year of fixed deposits from the public, before completion of 1 year, if you are in a position to repay the money with interest, such deposits for less than 1 year will be short-term borrowings. And any other small loan if you're taken, but only one condition is that you have to repay in less than 1 year is your short-term borrowings, other loans and yes. Now short-term provisions. We have seen long-term provisions like gratuity is a long-term provision. Now we have to focus on short-term provisions. Please read someone.
Borrowing shall further be subclassified as secured and unsecured. Nature or security shall be specified separately in each class. Where loans have been granted by director or others, an aggregate amount of such loans under each held shall be disclosed. Period and amount of default as on the balance sheet date in repayment of loan and interest shall be specified separately in each case.
We focus on the long-term borrowing, short-term borrowings, the content are the same. If you've taken a loan for less than 1 year by depositing title documents of your land or machine, that is short-term borrowings. So short-term borrowings is what? The money that we have borrowed for short period of time, less than 1 year, by giving any security is your short-term borrowings or short-term loans taken. Same loans which the company director has been guaranteed, which we have to pay less than 1 year, is again your short-term provision. Or that any amount that we have to pay, maybe a call by the government to pay some money, that is again short-term provisions. So any amount that we have to pay less than 1 year is called a short-term provisions. Then we have last item, that is other current liabilities. So what is other current liability? Please read.
Current maturity of
maturity.
loan.
Hmm. Yes, please. Please read.
Current maturities of long-term debts, current maturities of finance lease obligations,
Hmm.
interest accrued but not due on borrowings, interest accrued and due on borrowings, income received in advance, unpaid dividends, application money received for allotment of securities and due for refund, and interest accrued thereon. Share application money includes advances towards allotment of share capital.
So what is current liability? Current liability refers to any amount which we have to pay less than 1 year. Suppose that Satvinder has purchased share of my company and she has changed her bank account, because of which her dividend has been not been deposited in the account. She may call the company and ask, give my dividend. So we have to pay the dividend immediately. So any liability which has to be paid in less than 1 year is your current liability. So likewise, what we have seen or what we're reading in the slide is that unpaid dividend is one part of your current liability. Whatever you are borrowing small amount which we have to pay back is your current liability. One great example of current liability is the raw material that we purchase on credit, which we have to pay less than 1 year is a current liability. That is sundry creditors. Also, bills payable is one example of other current liability. Besides this, what is that? If we have if we have received application for shares, but then we are unable to issue shares, whatever money we have received as a share application, we have to refund that in no time. That is also your other current liability. Last is
Short-term provisions. The
Yes.
amounts shall be classified as provision for employee benefits, others.
Very good. So this is what we learned today. In a nutshell, today we have learned the balance sheet liabilities part, that is share capital, reserves, money received against share warrant. The third category we have learned is long-term borrowings. Then we have learned what is short-term borrowings here. Then deferred tax liability, other long-term liability, other current liability. So this is quite similar. This is your long-term, this is your short-term. So today we have learned the Schedule 3 balance sheet format, especially with the liability side. First is your equity in liabilities is the title for liabilities. In that, first is shareholder fund. Second is share application money pending allotment. Then we have non-current liability, that is your long-term liability. And lastly is your current liability. So that's all for today now. And I request you to go through some balance sheets. I will forward you the link and study the balance sheet of company, how exactly they are writing down the heads what I've just we have just discussed. Okay. Thank you all of you. We'll meet again tomorrow. Any doubt, any questions?
No, sir.
Okay.
No,
Have you
sir.
purchased,
No, sir.
you have any borrowed any books from anywhere?